Uh, let's start with the new area of AA audit assurance asset, that is system of internal control. Okay, firstly, we need to take we have to obtain an understanding of it. Okay, so uh, firstly, you need to know the definition. System of internal control. Right. So let's start with it. What is system of internal control? The system designed implemented and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about about the reliability of financial reporting financial reporting. Okay. The effectiveness and efficiency of operations and efficiency of operations and compliance with applicable laws and regulations. Laws and regulations. So far, so good. I hope you get it here. So, key point of the understanding of the entity system of internal control is obtained through risk assessment procedures to evaluate each of the components of the system of internal control. So, now the question is, what are the components of internal control? So, components. The system of internal control consists of five interrelated companies. Control, just a second. Control consists of five interrelated components. So, let's look at that. System of internal control consists of just a second. Uh, Let me fix it first. System of internal control. Yes, system of internal control. Yep, that's better. It consists of control environment, control environment first. Yeah, control environment. Then risk assessment. Risk assessment, next is information system. Wow, what a shame it is. By the way, information system. Okay. The fourth element is control activities. Okay, next one is control activities. Uh, control activities. And the last is control monitoring. These are the five elements. The auditor's primary consideration is whether and how a specific control prevents or detects and corrects material misstatement in the financial statement, whether its classification into any particular area or in components, right? So, what are the audit requirements in particular to it? Well, audit requirements auditor must understand the five components of internal control as an essential part of risk assessment, in particular, control environment. The control environment, the risk assessment process, Information system and information system control activities. Control activities that determine auditors' assessment of control risk and then uh, entities control monitoring system to assess the system of the organization so that they can determine whether to rely on the controls or not of organization. So far, so good. What is control environment? Control environment includes governance and management functions, the governance and management functions, the attitudes awareness, the attitude awareness, and actions of those charged with governance. Those charged with governance and management concerning internal control. So the control environment provides the foundation for the operation of the other components of the system of internal control because sets the tone of an organization, influencing the control consciousness of its management and its employees strongly relates to how management and governance has created a culture of honesty and ethical behavior supported by the appropriate controls to prevent and detect and fraud and error. The control environment does not prevent or detect and correct misstatements directly. However, it influences the effectiveness of internal other controls. A robust control environment may be positive influences when assessing, for example, risk of fraud or error. However, elements must be considered collectively. Example, enforcing ethical values and appropriate recruitment policies for financial reporting staff will not mitigate aggressive earnings reporting by senior management. So, you know, the control environment The control environment, the control environment provides a the control environment relevant to the preparation of financial statement, address number one, how management, how management's oversight responsibilities are carried out. Where relevant, that is when those charged with governance are separate for management. The independence of those charged with governance and their oversight of oversight of the system of internal control. The assignment of authority and responsibility. The next one. Authority and responsibility of competent individuals are attracted, attracted, are attracted, developed, and retained. All individuals are held accountable for their responsibilities relating to the system of internal control. The auditor must evaluate whether management has created and maintained a culture of honesty, control environment, provides an appropriate foundation for other components of system of internal control. Any control deficiencies identified the control environment undermine the other components of the system of internal control, vice versa, right? Next is risk assessment process. So the risk assessment process, what is it? The auditor must obtain an understanding of the entity risk assessment process, including how the entity, you know, identify risk relevant to financial reporting objectives. Relevant to financial reporting objectives. Assess the significance of those risks. Address those risks. Right. The auditor must evaluate whether the risk assessment process is appropriate to the nature and complexity of the entity. This is a matter of professional judgment. If auditor risk assessment procedures identify risk of material misstatement that management failed to identify, auditor should determine whether such risks should have been identified by management. If so, obtain understanding of the why the entity risk assessment process failed and consider why the entity's risk assessment process is appropriate, right? Uh, Now, information of system and communication. Information system and communication. So the auditor is required to obtain an understanding of the entity's information system and communication relevant to preparation of financial statement by, you know, number one, understand the information system activities. Activities, by including its data information, the resources used in such activities, the policies define for significant classes of transaction, how account balances and about account balances and disclosures. You need to take the understanding how transactions are initiated, initiated, recorded, and processed. Processed, corrected as necessary, incorporated in the general ledger and reported in the financial statements. All information about events and conditions. Other than transactions is captured process and disclose. Okay. Uh, the accounting records specific accounts specific accounts in the financial statement and other supporting records. The entity's resources, including the IT environment. Okay, so far so good. Also, need to understanding how significant matters that support the preparation of financial statement. Of financial statement and related responsibilities are communicated. So far, so good. And it includes within that team between management and those charged with governance, uh, evaluating whether the information system and communication appropriately support the preparation of financial statements according to applicable financial reporting system. Right, so far, so good. Now, the question is what's included in information system? So, an information system consists of what? Physical and hardware, software, IT based, people, procedures, and data. People, procedures, data. Right? So it includes the accounting system, consists of procedures and record established to initiate, record, process, report, and maintain accountability of the records and information necessary to satisfy management and financial reporting objectives. This encompasses recording the correct monetary amount of transactions and recording the transaction in correct accounting period that is cut off. Right. So far, so good. I hope you get it till here. Then we have control activities. So the control policy, what does control means? Well, control policies or procedures to achieve the control objectives of management or those charged with governance. To achieve the control objectives of management or those charged with governance. Policies. Statements of what should or should not be done within the entity to affect control. Okay. What are the procedures? Actions to implement policies. So control activities are performed by employees at all levels and may be preventive or detective, manual or automated. Okay. And authorization of us that a transaction is valid. It may take the form of approval by a higher level of management, automated approval within a system. Examples of matters to be authorized: purchase of disposal of non-current assets, new suppliers, supplier payments, purchase and sale invoices, new employees, wage rates, promotions, journal entries, including, for example, bad debt written off, etc. It includes, well, authorization and approval is one of the example which I just discussed, right? That reconciliations, reconciliations include, you know, compare two or more data elements. Action must be taken to bring the data into agreement where differences are identified. We have verification, verifications compare two or more items with each other to compare an item with a policy. Follow-up action must be taken where items do not match or are inconsistent with the policy. Verification generally address the completeness, accuracy, or validity of processing transactions, include added checks, validation checks, automated calculations. Then we have physical or logical controls. Physical or logical controls include, physical security of assets and records include safeguards such as secured facilities. Logical controls authorize access to computer programs and data files. Periodic comparison of book to physical amounts and segregation of duties. Separating the authorization, recording, and custody functions reduce the opportunities for a person to be able to make conceal errors of fraud. Actions of one employee are checked by another, right? So, so far so good. Now, as we have discussed, the control environment and control activities both, both are interlinked. How? Let me give you the example. Suppose this is one house and this is another house. Okay. Uh, in one house, they are they have environment of good health, right? There is an environment of good health. They always like, be careful about your health, do careful, be careful, take care and all that, but they do not have activities. They do not have activities. Like, you know, they unhygienic food they eat, they don't do exercise, etc. So environment is there, but activities are not there. There is another home where the scenario is totally vice versa. That means they have all the resources, they have exercise equipments there, they have, you know, they have hygienic food there, but they don't have activities. No one does it. No one does the exercises. No one does the take the hygienic food. They always order from the McDonald's, the KFC, and another restaurant. So the use, if both are not there at the same time, you know, uh, it's of no use. But in the corporate environment, let's say they are like, they have no good internal control system. They have segregation of duties. They have authorization and approval process there. They have a reconciliation process there. But management is not serious. Management is not honest. They don't work with integrity. Do you think it is useful? No, right? Now the vice versa, the management is honest. They work with integrity. Okay, the environment is there, but they have no segregation of duties. They have no control activities of authorization, approval, and all. Is it useful? No. So both things need to be there. And then we have finally monitoring process. So monitoring is a process that evaluates the effectiveness of controls and identifies and rectifies. Rectifies control deficiencies. Without monitoring and feedback on the performance, control management will know whether a control, although still operating, is effective. Monitoring activities may be ongoing or separate evaluations. Okay, they can be both. So I hope it is clear till here.